Welcome to Two Guys.
A girl.
And an MBA. What happened to you this week?
So this week, Alibaba spiked up, this month actually, they spiked up about 65 plus percent. Uh, I sell call options on my shares. The price was at 85 a share. I wrote the position at 110 thinking it'll never spike up that quick. And it quickly spiked up close to 150 a share, whereas about 145 a share right now. And it's on the news of AI, that Baba is going to be spending a lot on AI. Alibaba is going to start supplying Apple phones in China with their AI whatever software. So investors just got frothy and said buy, 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 and I got caught at the wrong moment. Usually I sell that same call. I've been selling that same call for like 3 years, and it always expires worthless. Means I collect the insurance money for it, and I keep my shares. But this time I'm probably going to lose my shares next week. So I'll no longer be an Alibaba shareholder.
Yeah, okay, so somebody called the option.
They're going to call the shares away from me because it's so far below the value now. Unless it drops another 30% or whatever this week.
When's your whatever expiration? It's next week, but they can call it any time, can't
They
they?
can call anytime, but they
Yeah.
tend not to, like people when they buy options, they tend not to call. I've had options called or put to me for more often they put to me before they're called away. But people generally hold to the expiration date, and when I'm writing options, I'm looking at the probability of assignment that it's going to be out of the money or in the money. And you don't get that full probability unless you wait till the full expiration. Like, for example, here's a good example. I had calls on some food companies on Thursday, uh, Campbell's and General Mills, right? And on Thursday, they were both below the strike. These are puts. This means I'll have to buy the share. If I had not stuck it out to the next Friday, I would have had to buy all those shares. I waited one more day and they all jumped up above the strike. And
Oh,
right? Yeah. So you have to wait the full term sometimes. So yeah, Alibaba, fingers crossed. What do you guys think about the news of AI coming to China via Apple phones?
I think it will be like a wave. It's not only for Alibaba, but for other
Okay.
who can do the same. And it could be like, okay, it can happen with us, and it will like a wave rolling, 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 and strike. So you should be attentive to other options. Maybe something appear. But definitely, it's like a change maker. We'll see. And definitely, we'll ask you about what happened next Saturday.
You didn't lose money, you just didn't make as much money as was available.
Yeah, see, I always write the call option slightly above my cost basis so that if it's called away, I lock in a profit. Any higher that the share price goes is just lost opportunity. And it's usually not a big deal. Like, say I paid 105 for the stock and I wrote the call at 110 and it jumped up to 115, it's whatever, It doesn't usually jump 65% in a month. That's why it caught my eye, obviously, my AI eye. This volatility is coming from people that are just flooding money into the market on news of AI. It's so like that's not value creation. That is just pandemonium, frenzy, a bubble, whatever you want to call it. That's tulips in Holland. That's just a bubble, and a lot of people have been comparing it to the 2000, internet bubble. Yes, the internet changed the world, but it took 20 years to kind of monetize it, and there was only a few winners: Amazon, Facebook, Google. Most of them went under, right? Pets.com or whatever, right?
Yeah, so it's funny that euphoria, they jump in, and the euphoria can go the other way.
Yeah.
It's almost like you got a great risk mitigation strategy for the craziness, the Reddit people, all the, at their home in their pajamas people. Um, I think it's probably the best thing because, like you said, it could be, it is a bubble of a sort, and you rather be on the right side of that because I think it might pop back down again, back to reality, back to efficient markets theory, what it should be worth based on future outlook, like that. So,
Yeah, it definitely does serve to like force you to buy low when you're selling puts. And when you're selling calls, they're secured with stock, it kind of forces you to not participate in that frenzy. Like Buffett will frequently, he just sold a ton of Apple stock because he thought it's overvalued. I own all these shares. It's a big get. He just takes a gain, right? And so it keeps you from participating in those high highs, you know, and so it keeps you buying low and selling high. It's just when it moves up so quick or down so quick is when you get caught, when the volatility spikes. And, you know, I didn't see it coming with the AI news on Alibaba because it's been quiet. China's been kind of quiet. DeepSeek came out, but I didn't put two and two together like, oh yeah, the biggest e-commerce company probably is going to get on the AI bandwagon at some point, and now it looks like it is. At my expense, at my opportunity cost, right?
I think you should check your list and who next will be involved with AI. I think
Yeah.
it's everyone will be, but even if it's like development, something, anything, any industry, any company, definitely will join with some AI opportunities.
Please consider subscribing below.
Thank you for being with us. Please leave your comments, feedback, what you think about us, and see you in the next podcast. Bye.